Welcome to the Daily Business and Finance Show. Oil's push towards $100 may not last as demand begins to decline. David Tepper discusses the QT era. U.S. House passes 45-day funding bill to avoid government shutdown. The potential impact of a government shutdown on Bitcoin. Auto stocks face turbulence amid UAW drama, delivery updates, and macro concerns. Evercore reports strong demand for Apple's U.S. iPhone 15 Pro. But China and Japan lag behind. Unity Software could experience mobile windfall, but UBS takes wait-and-see approach. BTIGs. Krinsky advises keeping an eye on Apple and TLT inflection points. Stay tuned after the short ad break for more insights into these headlines. Crude oil experienced its strongest quarterly gain since the conflict in Ukraine, but experts on Wall Street are skeptical about the sustainability of this upward trend. The surge in prices is already having an impact on demand, as evidenced by a decline in gasoline consumption and reduced sales reported by airlines. Analysts predict that oil prices will likely stabilize around $90 for the remainder of the year. If prices continue to rise, it could incentivize U.S. producers to ramp up their production levels, while Saudi Arabia may tap into its surplus crude capacity to alleviate pricing pressures. Notably, energy stocks performed exceptionally well during this quarter, with the SPDR S&P Oil and Gas Exploration and Production ETF recording a notable 17% increase.
Billionaire hedge fund manager David Tepper expressed his perspective on the stock market, highlighting the current shift in dynamics due to higher interest rates. He recently allocated funds into a certificate of deposit offering a 6% interest rate over a 6-month period. Tepper's Appaloosa Management hedge fund still maintains significant holdings in companies like Nvidia, Meta Platforms, and Microsoft. Bank of America projects that their net interest income for Q3 will reach $14.2 billion as a result of deposit pricing considerations.
The U.S. House of Representatives has approved a 45-day funding bill aimed at keeping the government operational. House Speaker Kevin McCarthy has abandoned his request for spending cuts and garnered support from Democrats. The bill will now proceed to the Senate for voting. Notably, it does not include assistance to Ukraine but allocates $16 billion for federal disaster aid. Failure to reach an agreement by Sunday would result in furloughs for federal workers and unpaid military troops. The bill maintains government funding at 2023 levels, bringing us closer to a bipartisan resolution. Senate Minority Leader Mitch McConnell expresses optimism that a shutdown can be avoided.
As Congress rushes to approve spending legislation for the federal government before October 1st, the potential government shutdown could have implications for the price of Bitcoin. Historical data shows mixed results during previous shutdowns, a decline of 9.8% in 2018 to 2019 and a climb of 7.8% in 2013. However, it's worth noting that there is limited information available on this specific topic. Analysts argue that factors other than government shutdowns have had a greater impact on Bitcoin's volatility. Furthermore, a shutdown could lead to delays in regulatory decisions concerning crypto securities, including matters related to crypto exchange-traded funds. Some investors believe that non-sovereign currencies like Bitcoin would remain unaffected by government procedures, while others caution against potential liquidity drains and sell-offs across financial markets. Overall, the consequences of a government shutdown on Bitcoin are uncertain due to various factors at play.
In the auto sector, sales and deliveries reports are anticipated from manufacturers including NIO, XPeng, Tesla, and Rivian Automotive. The United Auto Workers strike has expanded to 2 additional assembly plants, General Motors' Lansing Delta Township plant and Ford Motors' Chicago plant. Negotiations with Stellantis have shown some progress. These strike actions may result in significant losses across the industry. Retail inventory levels are expected to increase compared to last month but remain below pre-pandemic levels. Manufacturer discounts have risen from last year. However, monthly loan payments are also increasing, raising concerns about auto affordability. Bank of America maintains buy ratings on various auto supplier stocks, while Wedbush Securities views Tesla as a potential winner in the U.S. if costs rise for Detroit automakers. Baird designates Rivian Automotive as a bullish fresh pick ahead of its Q3 deliveries report. Japanese brands like Toyota may benefit from the strike fallout due to their lineup of affordable models. Analysts caution that Ford's investment thesis has been destabilized by UAW's pay raise demand.
Apple's iPhone 15 Pro deliveries in the United States are strong, with a delivery estimate of 35 days. However, deliveries in China and Japan are slightly weaker, with lead times of 18 and 25 days respectively. These findings come from Evercore ISI. It is worth noting that iPhones accounted for nearly half of Apple's revenue in the last quarter, making these delivery times crucial for their financial health. Comparing to last year, lead times in the United States have improved while China's have worsened. In the United Kingdom and Germany, delivery estimates for the Pro models stand at 32 days.
Unity Software is expected to benefit from the expanding mobile gaming industry, as suggested by UBS. Analyst Chris Kuntarich has initiated coverage on Unity with a neutral rating. He emphasizes the potential for revenue growth due to favorable pricing models and increased monetization of AI tools. However, there are concerns regarding the impact of the runtime install fee and Chrome's cookie deprecation. Despite recent adjustments to its pricing structure, Kuntarich believes there may be a higher risk of customer turnover than initially anticipated. It is worth noting that Unity's stock has recently experienced a significant decline.
Apple stock recently approached its 200-day moving average, drawing the attention of BTIG technical strategist Jonathan Krinsky. Krinsky suggests monitoring how the stock responds if it weakens further. On Friday, Apple's stock increased by 0.4%, closing at $171.29, which is above the 200-day moving average of $166.90. Krinsky emphasizes the significance of bonds in this context and highlights that equity performance may rely on bond stabilization. Notably, the iShares 20-plus-year Treasury bond ETF is currently trading well above its average daily volume and could potentially impact equities in the near future.
Thanks for tuning in to the Daily Business and Finance Show. Stay informed, stay inspired, and we'll catch you next time for more insightful discussions. I'm Montgomery Jones.
And I'm Amalia Dupre. It's time for us to say goodbye until we see each other again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.